Good afternoon, traders. As always, hope you've had a successful trading week so far. Now coming towards the end of the week, and I must say it's been a fairly subdued day in FX, apart from now where volatility is beginning to increase. And I've noticed this is becoming a regular thing now. Like last Friday as well, day was pretty much dry, and then towards the end of the Friday session, really starting to see volatility picking up. Perhaps this is going to be the new sort of Wednesday, Thursday in FX markets. But again, fairly subdued, but volatility really picking up now on the back end of Florida COVID-19 cases, and that data did show a significant spike in COVID-19 cases within Florida. So quite concerning for markets and really encouraging that kind of risk-off mood. So the topic of this blog then is just really a wrap up in terms of what's happened over this week. So 3 main themes that you want to take into account, and these are applicable for the trading weeks to come, so do kind of look into it. So the first one is the fact that we are having these accelerated COVID-19 cases, and predominantly in the US. So what we've noticed over the last 2 weeks or so at the Fleet Network, and we always list this data in the reports that we send out to our members every day, is the fact that we have US states like Texas and Florida that are really showing a spike and aggressive growth in COVID-19 cases and deaths, with arguably Texas being the worst one affected. So in terms of Texas then, Texas only yesterday recorded 5,000 confirmed cases, which is a record high, and overnight literally reached maximum hospitalization. So the state in Texas is really, really bad. It's almost going back to like that sort of Spain, Italy type situation where they would have outdoor medical facilities in public domains in terms of temporary ones, because the hospitals were absolutely packed to the max. So really concerning in terms of the growth of that COVID-19 there. But the problem with the COVID-19 data right now is the way that it's being viewed by markets. It's been taken literally at face value. So what that means is every state will have its 7-day averages, and what markets will do is it will look at the reported COVID-19 figure and it will just compare it to the average, and that will dictate whether the market will be on the risk-off mood side of things or on the risk-on mood side of things. And that's just statistically the wrong way that markets are looking at it. It shouldn't be looked that way. What it should be looked at is on a much more global scale. So if you go on Google and you just type in global COVID-19 cases, you'll see that there's a massive spike. We're week on week increasing in terms of COVID-19 cases across the world. And one interesting observation is that towards the latter sort of weeks, so towards the more recent weeks, you'll see that spike becoming a lot more aggressive towards the upside. And so that tells you that the global situation is becoming a lot more worse. Now, the IMF, who are a large international body, one of the things that they said is that there is this really big divergence between what financial markets are pricing in and what the reality of the COVID-19 situation is. And they believe that there is at least a 10% correction coming in for financial markets. And I have to side with that, because again, the data is taken at face value, and it shouldn't be taken at face value. It needs to be taken from a more bigger picture. And also, you have to bear in mind that you have a lot of countries like China who are quote unquote fudging their data. So most recently we had Beijing. There was a massive outbreak in Beijing, and if you had a look at any media report, you'll see images of almost like a military zone where you've got people wearing full-on biohazard suits, you've got no one around in the streets, you've got people with antioxidants everywhere, just trying to really go back into sort of maximum lockdown situation. And China, despite that, are reporting 0 cases, 0 deaths, which is obviously not true. So that's not being incorporated into the data, but we know that it's a reality. So that's why the data shouldn't really be taken at face value. But what you should understand or take away from this sort of theme is that cases are increasing, they are on the rise, and markets might begin to start actually taking this a lot more seriously and pricing in the reality of the situation rather than the economic recovery or economic optimism. The second theme then is this tension that we've got between US and EU. So as you may or may not know, the US are looking to impose around 3.1 billion in tariffs across EU members such as France, Germany, and also the UK, which was pretty interesting because the UK are actually going to leave, as you know, the EU later on this year as a result of Brexit. So interesting that they've included the UK in there. But a lot of these tariffs will be on kind of alcoholic beverages and then produce as well, like cheese, all the way to airlines as well. So last year, actually, the WTO had approved a request for the US to impose a multi-million-dollar tariff on EU airline Airbus. And basically the EU are now responding to this 3 billion tariff set by the US, and they're looking to now impose tariffs on US airliner Boeing. And I know I've said that wrong, but just check the description. But Boeing. So there's this back and forth between these two airliners, and the situation here, and the reason why this sort of kickstarted in the first place, is because both Boeing and Airbus have both been accused of breaking WTO guidelines. So WTO stands for World Trade Organization. They've both been making billions off of these subsidiaries, which shouldn't have been allowed under WTO regulations. So WTO is likely to pass through the EU's recent request in terms of placing tariffs now on US Boeing, and that escalation is probably going to start escalating. So do just bear that in mind for the week ahead. And then lastly then, we've got PMI data. So this week we had UK, EU and US PMI data, of which for all three groups did come out relatively positive. But the main case here, and the sort of main concern, is that, linking back to theme one when I was talking about COVID-19 cases, is that the data can't be taken from face value. So even though, for example, in the case of UK, the PMI was reported to be 50.1, I believe, IHS Markit, which is the entity responsible for actually producing this data, did actually say that although the data was 50.1, basically actual orders was less than 50.1, and if you have a PMI figure that's less than 50, that's actually indicative of a economy that's still retracting, not really one that's in its sort of recovery phase. So markets, again, taking things at face value, not really looking too much into the actual overall picture. But on the case of PMIs, they are massively better than previous month recordings, and recordings back in April as well, and against the forecast, which is obviously a major plus. So we are starting to see that recovery in economies, which is a positive thing, and that's really fueling that V-shaped recovery. Although I feel that markets right now are pricing in a much more optimistic reality than what's actually going on. So again, there is that potential for a correction there, but overall, markets remaining sort of optimistic on economic growth. But again, they're going to have to face that reality sooner than later. But that's it in terms of the 3 weekly kind of key events that you need to take into account.